Whether you're buying or selling your home, get the benefit of expertise.
Hey, well, compliments to the show. You're really hitting on the subjects and you're telling the truth. I appreciate you.
Meet the team at dangemus.com. And now, filling in for Dan Gemus, your host, Joyce Blackmere.
Welcome back, everyone. Thanks for tuning in. I have Aaron Blackmere in studio with me today. And we're talking about something now that affects pretty much every homeowner at some point. Mortgage renewals,
Yes.
Maybe refinancing, maybe you're going to transfer your mortgage, whether your term is coming up or you're exploring different ways to tap into home equity maybe. There are some options and considerations, and some people don't necessarily realize what those are or how they work. So who do we have? Well, none other than the birthday boy, Ron Bondy, mortgage agent from the Super Mortgage team. Hi, Ron. Happy birthday.
Hi, guys. Thank you very much.
So, Ron, tell us what
are you doing for your birthday?
Okay, yes.
Sorry.
Tell us that first. What are you doing for your birthday?
I'm doing the radio show. That's what I'm doing for my birthday.
Well, you're welcome. That's the gift that keeps on giving.
Exactly, 100%. Stamp in time.
Yeah.
No, we're going to my mother-in-law's today because it's also her birthday.
Oh,
so
nice.
We're doing a joint celebration. Yeah.
Perfect.
What are the odds?
Well, happy birthday to her as well.
There you go. Perfect. Radio shout out.
Well, in today's economy, people are coming up for renewal on their mortgages. Their 5-year terms from COVID time are coming due, and there's options, right? What's happening, Ron? How about you talk to us about the different options people have and pros and cons, all that fun stuff?
Yeah, for sure, 100%. So with if there's about 70% of mortgages coming due this year next because most people refinance their mortgages when the rates were at an all-time low back 4 or 5 years ago. So this is actually a good bit of information for people and why they might consider to do each option. So the first one is just a renewal. You got a renewal coming up. You go to your bank. You renew your mortgage. Why might you want to do that? Maybe you just switch jobs. Maybe you won't requalify. So you don't have to requalify if you're just renewing your mortgage at the same lender, providing that you haven't missed any payments. Because if you missed payments, your lender might not want to renew you. And you just want to renew. Yeah, rules. Geez, people. What, you mean you have to pay your mortgage? But anyways, if you don't want any extra money, you just renew. If you don't want to play with your amortization, again, you just renew. When you would want to consider refinancing. So refinancing is if you, say, want to extend your amortization to lower your payment. Like everybody is going to get a higher rate. So now than what they had 4 or 5 years ago, because 4 or 5 years ago was an all-time low. So the rate's going to be higher, which means your payment's going to be higher. So if you're sticking with the same amortization, your payment is going to go up. So if you can't afford that, you might want to look at refinancing, restretching out your AM to 25 or 30 years. And that way you can afford to stay in your house and maintain your lifestyle. Another good reason to refinance is if you've always wanted to do some renovations on your house. Well, this is the time to do it when you're not breaking your mortgage to refinance. You're just refinancing at your renewal, so there's no penalties. If you wanted to pull some equity out of your house to buy a second property, investment property, perfect time at renewal to refinance and do that. If you have credit card debt, lines of credit debt, behind on any bills, again, this is perfect time without a penalty to access money from your mortgage to pay for those things. Now, transfers is the last one. Now, why would somebody want to transfer? So ultimately, the bank sometimes does not offer you the best rate to keep you. So if you go to somebody else and transfer your mortgage to them, they might offer you a better rate than what your bank is. So it's always good to have a conversation with somebody else before you renew if but the downside to transferring is you have to requalify again. So you have to provide all the docs, and some people just don't want to go through all the doc giving to save some money. It's
Right.
just, some people just doesn't sound like it. They don't think it's worth it, but that could buy you groceries for 2-3 months. So
Yeah,
to
for
me,
sure.
I think it's worth it.
So maybe are you able to give an example of maybe, like, let's say I'm just going to use you as the example. As the mortgage broker, you're able to save somebody, let's say, a quarter point. What does that equate to on like an average mortgage on a monthly basis?
So it's about $20 for every 100,000.
Okay. So that
just to
that
make
adds
it a
up,
little-
right? Pretty
that adds
quickly.
up. Yeah. Like let's face it, most people's mortgages aren't lower than 300 these days. So
Yeah.
that adds up. That's a good monthly chunk, right?
Yeah, for sure. So, Ron, are there any penalties? Are there costs associated with switching mortgage lenders?
So when you switch, if you're transferring the mortgage, now transferring means you're keeping the same amortization. You're just moving from a lender to the next. The lender pays for all the legal fees. The only cost associated is the discharge fee to discharge the mortgage from your bank. So that's about $400. So we're not talking big costs. And the bank picks up the appraisal fees, or like the new lender picks up the appraisal fees and the lawyer's fees. Now, if you're refinancing, then you have to pay the legal fees and the appraisal fees and the discharge fee. And at that point, to refinance, you're looking at probably about $2,800 in cost.
Okay. So
which
there's
is
a bit
not a lot. Like a lot of
no,
people.
but you still need to factor that in considerations.
Correct, 100%. Yeah, that needs to be factored in, and by a lot of times that's probably 2-3 months of interest on what you're paying on a credit card. So, and then that credit card balance is gone. It's on your mortgage, and you're recouping that cost very quickly and improving your lifestyle.
Yeah, for sure. Well, I mean, with the cost of living having gone up so much, I mean, having different options like these on renewal or when you're coming up for renewal, it's important because, like you said, that $20 on every 100,000, that's a lot over the course of a year.
Oh, for sure, 100%. It adds up, and most people lock into a 5-year fixed. That is the common one that most people pick. So it's a long time and a lot of money after 5 years.
Yeah. Now, outside of just comparing rates, if somebody's considering doing, let's say they're going to transfer to a different lender, what are some other considerations they should be looking at outside of just the rate itself?
So they also want to look at what penalty they might get if they break the mortgage early, because that could be a consideration. Some people actually, they pick a 5-year term knowing that they're going to break it in 3, just to get the lower rate. But if your penalty is too high, you're not saving any money by taking the lower rate. So you want to look at the penalty. The other thing is, it's not much for first-time home buyers, but for people that own their home for a while, they want to know prepayment options. So, once you've been in your house for over 5 years, a lot of people start looking at prepayment options. So some banks offer 10% lump sum a year. Some banks offer 20% lump sum a year. So it all depends on where you think you're going to be in life while you have that mortgage, and are you going to be able to utilize these prepayment options? And are you fine with 10 or do you want the 20, right? So that's the other consideration, because, like some banks will do double up payments. You can double every payment. Some banks won't. Some banks will do, you can increase your payment by 10% once a year. Other banks won't. Some banks will be 20%, right? So it's, you really, if you think you're going to utilize 20%, then you really want to. And if they're only giving you 10, well, then you're paying a lot more interest on money that you could have put down on your mortgage.
Right. Yeah, makes sense. Ron, thanks for joining us today. If people want to reach you, they have questions about getting a mortgage or doing a transfer, how can they reach you?
They can reach me on my cell phone, 519-791-2961, or they can email me at ronbondy@supermortgageteam.ca, or they can get in touch with one of your lovely agents.
Perfect.
Always.
Well, thank you so much again, Ron. Have an awesome day celebrating your birthday.
I can't believe Joyce made you do math on your birthday.
Yeah, well,
I know, right?
That's how I roll. That's Ron Bondy, mortgage agent from the Super Mortgage Team at Dominion Lending. We need to take a quick break, but before we do, Aaron, we're giving away a gift card for the Richmond Popcorn Company. Caller number
3.
Caller number 3, nice and easy. Caller number 3 will win a gift card to the Richmond Popcorn Company, 2 locations, one in Amherstburg and one at the Tecumseh
And just as delicious
Mall.
at both.
There's not lots more to come, but there's still a bit more to come right here on the Dan Gemus Real Estate Show.